Welcome to REIT Magazine's weekly report. I'm Alan Kenny.
And I'm Matt Bichard. In our first story this week, NAREIT Simon Property Group announced plans last week to spin off its strip centers and smaller malls into an independent, publicly traded REIT. Simon Property Chairman and CEO David Simon said the move was being made to unlock the potential of the strip centers and smaller malls while allowing the main company to focus on its larger assets. The new company will be called SpinCo and is expected to own or have an interest in 54 strip centers and 44 malls.
Fitch Ratings said in a report released last week that it is maintaining its stable outlook for U.S. equity REITs heading into 2014. Fitch said positive factors in favor of the commercial real estate industry are likely to be kept in check by a slow economic recovery. Regarding REITs' capital structures, they should continue to have clear access to the markets for secured and unsecured debt, according to Fitch. Fitch projected that conditions in the capital markets would enable REITs to improve their liquidity and refinance some of their higher cost capital.
REIT.com continues to roll out video interviews from REIT World 2013 with commercial real estate executives, investors, analysts, and industry professionals. In one of the dozens of interviews from the event now available on REIT.com, Extra Space Storage CEO Spencer Kirk told REIT.com that he sees a highly favorable environment for the self-storage industry.
Because of some difficulties in bringing this asset class out of the ground and getting it leased up, we see muted supply for the next 2 to 4 years. Secondly, the internet was the big game changer. We're a retail play now, and the scale and sophistication to play on the internet has virtually locked out the smaller operator. So the internet has not become the great equalizer, as many people thought. It's the great divider, and so the large publicly traded companies are taking a disproportionate share of customers that are available in the marketplace.
Also on REIT.com, NAREIT Vice President of Research and Industry Information Calvin Schnorr discussed some of the trends pointing towards healthy economic expansion in 2014.
Well, a stronger economy has got to be helpful for all the real estate sectors. That's just a given. You're going to see stronger absorption. One area where you'll see it is office that has so far been concentrated in central business district. The recovery will spread to suburban and tertiary markets. Retail will benefit from stronger consumers. Multifamily sees more supply coming on, but that supply is in a tug of war with the demand, and so stronger payrolls, stronger employment means that you may not see too much of a pressure on rents from that supply.
And that concludes this week's edition of Weekly Report. We'll be back on January 6th.
Until then, be sure to visit REIT.com and RealEstateInvestmentToday.com for all your latest commercial real estate news and analysis.